How you doing, Rafi? You making money? Okay, guys, let's start. Okay, this is the euro dollar. This is the euro dollar here. I mean, the count is being, sometimes give you more than one alternative. Always going to be like that. But at the end of the day, all it matters in trading is knowing what Elliott Wave is telling you. And Elliott Wave is being all weeks telling you one thing, that the euro dollar is in a correction. That's all it matters. The rest is art. Yeah, me too. The rest is art. I mean, the little details. I mean, not everyone's going to be able to count the wave, the same wave that people like. Some people see the wave different. Some people get more complicated. Some people can, same things everywhere. I mean, there is 1,000 painters. Not everyone is Picasso. So that's another thing. But what it matters is that you as a trader needs to know, being practical, of what the market is going to do. And then you're going to be able to make a lot of money. That's the only way, without bias. Again, let me say that. Now, what the euro was telling you, is telling us all week, is exactly what is being taking place. The euro is correcting lower. This is the first take of the correction, and on and on and on. Now, the euro is getting to the final stage of a correction. Look at the FIBO levels. This related with this. 618. These two almost equal. Right there. Now, and then we get back. We mentioned yesterday on the forum, remember that I said that this B wave, it was kind of small. Remember? Exactly. It proved me correct. And I say 3 waves here, a flat in the middle, and another 3 waves back to the 618 of the whole cycle from here. So what you got, A, B, C, W, A, B, and C, S, and then we should get to around 3240 area, most likely, if this count is correct. Now, what is amazingly important here is that this high at 59.3, it went about 53.4, which that's going to avoid or takes away the second count when we were here in it ABC, W, S, ABC. That's gone. Now, what is nice here is how the market correlation always is a great tool. Yeah, I'll repeat it now. A great tool in the market. The question is this, Isaac. Yesterday, you have 2 counts, if you remember, on the service. First one was pointing this, and then we have an alternative of B right here. Remember? ABCW, ABCY, S, ABC. You remember now that one, right? That one is gone. Why is gone? Because that one is gone because this high at 59.3, it went about 53.4. So technically, the count that we have as a primary was the one that worked out at the end of the day. Now we have ABCW, a flat B, ABC. I mean, it's about time that people realize that this market have nothing to do with what the ECB said today. The market saw right here because it's an equal legs in the second zigzag. Is the C way is equal to A. The market saw right here because it's the 6-1A or this one. It's not because of what the ECB is saying. That's not the case. So what's going to happen now? I believe like yesterday, we were 100% sure that because the 5 swings on the dollar, we're going to get 3 backs. Remember? And we say the dollar is going to rally in 5. That's exactly what it did, right? Now, what we believe is seeing now is the same on the dollar, on the euro. Why? Because how many waves you have from the top? 1, 2, 3, 4, 5 swings. 5 swings do not make a correcting move. So you need a 6 and a 7. Now, what we need to see now is these levels on the euro. 33, 33.70, 30, even 34 can make it with a strong downtrend, making the case at 33.53. But 33.73, which is this previous low area, can make resistance now and turn the market to the ideal scenario, which is the area around. And now comes the resolution, which way the euro is going to resolve this. This is looking more and more like a flat. It's very deep, and you're expecting another leg down. Now, he can go 2 ways. Now, the first one is the first cycle. Remember when we say yesterday that this cycle was the 5 swings on the euro, on the dollar, remember? That's why we like 34.60 all over. You guys can see on the Skype feed how many times I say 34.60 area as a possible turning low. Now it depends on which way you're going to go. This one, it put the euro at 32.44 and bouncing. Now, this one, which is the second zigzag, no, I don't, yeah, it is possible if it is a flat. If it is a flat, it's possible, yes. Now, this one, let's say that go to the 618, is going to put the euro also at the 32.40 area. Or if it goes to the 76.4, it's going to put her at the 32.65 area. Now, that's Rafi, that's a good question. Because technically your risk is right here by you playing the possibility of a flat. All I know is this. It is corrected here and it is corrected here. Another scenario is the leading diagonal. How do you know if the leading diagonal? Which I don't like it because it doesn't go with market correlation. For the people that only see euro, a leading diagonal, they're going to say 1, 2, 3, 4, 5 swing. But that doesn't go because the S&P or the access at bullish risk. So that's for the euro, guys. Nothing more on the euro. Let's see when we do the out day later on tonight if we can get a better idea of where we are. But minimum, the euro should trade higher to minimum 33.50, 33.72 ideal area. And then from there, should turn lower again. For the bears, no, it's not a leading diagonal. I don't think it is. It can be a leading diagonal, and then it's going to be A, and then you're going to get a deeper correction to here, and then another rally to the downside. What I mean is not the leading diagonal, meaning that this is the hole that you're going to get in the correction. I think that this high should break faster or first, better say, that this low, but the flat can be in place. If there is only that worry me, not that I worry too much, because if I get stopped up here, I don't mind. Because cable, I'm going to go to cable now. So that's for the euro. Any question, guys, about the euro? For now, 33.70 should hold resistance, 34, and turning lower again to around 32.50 area, which is make the equal legs, and then from there, the market should bounce lower. All right? Now, let's move on to cable. Cable was a given today, a given. I mean, we told everyone last night. DB was tweeting onto, I don't know what time on the night. Now, cable was a given. Cable is either ABC, ABC, right here, B, and a flat. We took the trade right here at 60. It came out to be good, but cable also can be, but you got a lot of trades with cable. Cable also can be WS, and then now it's going to make something like this. Cable also can make something like this. So one way or the other, I believe that cable is going to trade higher. If it's a flat, do not need to break this low. Can be a flat right here and going higher from here, but I doubt it. I believe that the pattern should be something like this. Who knows exactly which way it's going to go. But higher from around 155. I like it. Now, the rest of the pairs, let's take a look at Aussie. Aussie can be in an irregular B way or S way, whatever you want to call it. What matters the most is that this structure right here, it looks like this. 3, 3, and lower. Now, another technique here is a kind of weird one, but like, I don't like it to be doing 5-way from the lows. But this looks completed or almost completed in that way. So what you mean in Aussie? Yeah, it's possible that the S way is over. It's possible that the S way is over. All you need to know is this. From here to here, you have a 3-way. From here to here, you have another 3-way. Another 3-way and another 3-way. Now, you can make the case the flat is the best structure, in my opinion, there. Don't you agree? I mean, for me, the flat is the best scenario. But, I mean, if the euro is going to stand another leg lower, how Aussie is going to react? Because Aussie needs to go lower. So let's see later on which way we can see this structure here. I mean, the only alternative is that this is a biggest A. In other words, that this is all a complete move. And then from there, it's going to trade lower again. In three ways. That can be in a scenario. I need to see later on how it works. Look at beauty there. To the 1.236. That's a 10-minute. That's a 10-minute measure for a flat, in my opinion. I mean, that's a 10-minute measure in a flat. But I like it. I like it higher because even the thing is that people were asking why we took the long in the euro and no cable Aussie. It's because the euro is close to these lows days. I mean, look at the risk in Aussie. What is the reason to fade and move in Aussie? It is possible that the B wave is done and it's going to start trading low, higher. Aussie always, guys, follow the cash, the S&P cash, and Aussie, they are brother and sister. Look, a beauty right there. That's what I say. You gotta take risks sometimes. And S&P, look, 3, like we explained yesterday, 3 back, and a flat. So S&P maybe do not have more extension. If S&P is down, guess what? Aussie is down. Don't you guys agree? If S&P is down to the downside, then you can bet money that Aussie is down to the downside. No, Rafi, that be no, because S&P is bullish. You know what I mean? S&P is bullish. This is a flat. This is a flat 3. 1, 2, 3, 1, 2, 3, and a flat. S&P is going to trade above 1,300 very soon. I mean, in my opinion, S&P is bullish to 13, and that's going to take all the risk trades to the risk pairs to the upside. That's for the S&P. Aussie, New Zealand, let me see what it done today. Look, the Norwegian krone, that's a beauty of a flat. Look, A, and then it did 1, 2, 3. It did a double zigzag right here on B and a flat. And this is how you guys need to trade it. Forget about the whole things now. Forget about all this right here. Everything. Only worry about this 5-way swing coming out the lows. That's the one that you guys need to fade it. Don't forget about B wave, all the stuff. That's the one. Look, it looks completed. You need to go more. And then you got to start looking at the structure and see the higher rate right here. Maybe have a nest. Maybe it's completed. But no matter what, or maybe in the wave 3 right here at the top. Look, there is no divergence in the higher degree. Let me see the 15. Maybe it's on the wave 4 now, and the final leg higher is going to be the move that is going to make the euro to a new low. So technically now you have to take your fibber from here, and maybe the Norwegian is going to get to 577. On the bigger scale, it's a flat correcting this whole move. So it looks like it's going to go from this area, which is 582, like we presented yesterday on the video. 582, 585, and then lower in a B wave flat. So very clear. The same with the dollar CAD. Look at the dollar CAD. We've been calling this move all over. Look, you got the first move ending here. You got A, and then the B when you have 1, 2, 3, 4, 5. And again, what do you need to matter? You need to matter only about this move right here. What do that move say? Very simple. Very powerful move, typical of a C wave flat. Now you put your RSI. Remember, C waves of the flat, they're very powerful. You start seeing some type of divergency. The move coming out of the lows. Let me see in 1 minute. Do not give you more indication of the way it's structured. But you have to let it run and wait for 5 back, a small time frame, and then fade it. You got one right here, another 5 here, another 4. 1, 2, 3, 4. So it looks like a flat, in my opinion. But don't fade it. You see, it's the same everywhere. It's the same everywhere. Look. What is the risk? What is the risk in the dollar CAD? He needs to be looking for 103, 104 area. 103 should be an ideal sell right there. Let's see if it gets down there. But I see the path. The flat in every metal pairs. I see the flat structure there. Any question, guys, about any pair? One second. Okay. Same scenario here, the Singapore dollar. The right core also. What you have? A move that ended here and corrected back. Looking for 130 minimum. Looking for 130 minimum right there. Maybe you have 1, a flat 2. And then you have to let it go and wait. Do not fade. In my opinion, do not fade the dollar against any pair yet other than the euro. That's my advice. The euro, the risk is very small. Look, right here, if you're going to sell it, You got to put your stop at 131.84, almost 200 pips. Other hands, if you go to the euro, look, your risk is less, or I mean 100 pips away. So that's favorable right there. That's the point. That's why you see that we took the shortened cable, because the risk was very small last night, because we knew that this is going to happen. But the risk right here was 100 pips compared to cable when you were risking only 30 pips. That's the whole idea. I mean, that's the whole idea there. Minimize your risk. Guys, give me 1 second. I got a personal call, very important, from my daughter calling me. 1 second. Sorry about that, guys. So, like I was telling you, the euro should make the 3 ways back. It looks like it did the first one already here. and now should do this and bounce down lower. Now, another question that I see right here is about gold. Looks like gold, like we mentioned last night on the chart, it's gonna trace the trend lines again and lower. So that's for gold right there, trend lines and lower. And I know that we have clients that they follow gold, and this is all I can tell you guys about gold. Gold, like I think it was Bruce, right, that asked this morning. All I can say is any weakness in gold should be bought after 5 weeks. That's all I can tell you, my friend. Because I know, I'm going to cover it for you now. I know that some people calling this a contracting triangle. I don't know if you guys are going to agree with me or not. This is too small in time compared to this. So maybe I would go with the best, another scenario. Maybe we are still, it's a possibility that we have the B already in place, but I would go with the equal legs. So 1627 should be bought in gold. I know it's like $80 below, but that don't matter. Another thing is, I mean, like, it's, all I can tell you is this. This is not the top in gold. I wish it can go lower to around 1400 so I can be a buyer around that area for a higher gold right there. Now, because you don't know yet, all you know, Bruce, is that this is corrective and that the high is gone. Now, it can take 3, and then going lower, like a one of those gold, move. That can be one scenario, or it can become a contracted triangle. But some people calling because of the two trend lines, that I don't like that as a triangle yet. This is on the daily charts. I don't like that as a triangle yet. You know what I mean? I don't like that yet as a contracting triangle there. Now, a small time frame, you ask me where the fight ends from here. No, but I mean, it's like what I was trying to explain to him, Isa, is like if the C-way can get into a complex correction and then go lower in a double zigzag when we end in the C now, going back and trade, things like that. Okay, right now, look, it's getting close to a buy. It looks like 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. So technically, maybe you close a cycle here, you close another cycle here, then you close another cycle here, and you close the last one. It's very close to be a buy, at least a temporary buy. It's contracting. Now, this was the sell for the gold traders. Against this high, that was a better sell than the buy is right now. What Isa was telling me right there is that I was trying to say, Isaiah, is if it's going to become a contracted triangle, you need to take into consideration this level right here, 1636, 1600. Now, if it's going to become a contracted triangle, why? Because it's the 618 right here, and then it's going to do this. I won't buy it right now, to be honest with you guys. I will wait to get deeper, in my opinion. Or I would buy 3 bags after clear what 5 in 15 minutes. I would buy it. But remember, we are about $230 out of the high. So it's going to be very good either way, the trade to the outside. Ideally, if it's going to become in a complex correction, ideally it's going to be 1416 as it is right now. Remember, there's still a chance that this is can go here and trade higher and lower. It's too early. That's all I can tell you, Bruce. It's too early. It's too early. If it's going to be a biggest correction, going to go to 1416. Otherwise, can do many things. But you have to remember, because I know you are a gold trader, the trend is to the outside. That's all that matters there. Any other pair, guys, that you want me to cover? Okay, 1 second. Euro yen. Let me see what the euro yen did today. That's good. Yeah, we usually, I mean, we run usually a good counts in gold. Gold is very easy to labor. Very easy, in my opinion. Okay, euro yen. Give me 1 second. Euro yen, it went low very hard, and this is another one that is showing a very nice path. 1, 2, 3, WS, 1, 2, 3, 4, 5. We have here A. Now it should trade lower and made the 7 swing to the downside. Here and higher. The 7 swing always needs to be bought or sell. Right there. I like it like that. Yeah, I like that. I mean, they're going to be equal legs. Let me see where the equal legs come. Yeah, equal legs comes around the lows. That's what I say. Don't discount a flat in some euro pairs. Any other pair, guys? Don't discount the flat. Every time that you see that you get to the 76.4 in any pair and you have another low coming in, don't discount the flat. That's all I can tell you. The EuroCAD, it looks like it's down and ended, and this is another bullish case. Look, I mean, it looks like finally it's down. You take a channel here, it brought about the channel, and now all you have to do is wait for 3 backs. It's been painful for some clients, I know. I think that ended the standard 5. Look at the 618. Yeah, it needs to break about here, this area. I always say with the new trends coming in, when you break about the previous 4, that's when it's most of the times that's the case. Like right here, breaking here, 37 area. Any other pair, guys? Any other question that you guys want? The market's been very, very good these days. It's been very good. I mean, I have no question about, look at the divergence. Right there. I was expecting even lowest prices here, 34.20. It did a low to 34.73. I think it bounced from the 618 here for the 123.6. Yeah. Any other question, guys? Let me see the recovery here. This pair sometimes, the short time friends, I always say, is very tricky. But the bounce was evident that was coming. Any other pair, guys, that you guys want to cover? Very important is the S&P cash, guys. Very important right there. Look, bounce and risk coming. That's why you concentrate on the Gore and S&P. That's good. You're located here in Florida, right? There you go. Well, let's meet one day. So you're a lucky guy, weather-wise. That's good, man. Let's meet one day. We're opening a manager account now. Yeah, we talk in person one of these days. Yeah. So any other question, guys? Now, S&P, it can be in a flat, three backs. It's almost done, yes. It looks like, Bruce. Look, and small time frame. That's what I say. I mean, I usually don't buy I mean, it looks like, but it can be a complication. Like, I believe that we mentioned that in the overview this morning, because this is how you need to look at it. Right here, you have 1, 2, 3 as A or W. You got three backs, that's B of S. Now, if it's a flat, it's going to go higher soon. You follow me? Otherwise, we always say a flat, let me say, it makes a new high, right? 6706, 6673. It needs to be a flat, yeah. It's a flat. It's a flat. So you need to start, I mean, for those traders, look at the divergency on the bullish divergency between this low and this low in the RSI. So technically, he won't do this. You have to fade the phi because the bounce coming. That's why you need to be in risk. Now, in my opinion, you need to be in risk because you're fading a phi. No matter what it is, you're fading a phi. Worst can happen to you is a three back. That's the worst can happen. You got it? Let me see if I can get the insides there. One second. Give me 1 second, guys. It looks like this is a flat in regular here. And you got three. No, this is a phi. You got 1, 2, 3, 4, 5 here. This is the end of 3. This needs to be a 38 or 2 or something right there. But it's extending a bit. I mean, the structure is nowhere defined. I can tell you that. Yeah, it counts better as a double zigzag. But then, if it's a double zigzag, you shouldn't have a high right here. Because this looks like a 3. S&P sometimes get this type of, like it did right here, look. It's very similar to something like this. I want you guys to see it, look. You see? Down. It's a sideways correction. You got divergence on the high here. What I don't like, I gotta be honest with you guys, what I don't like is this. The structure here. Got 3, 4. Because this, I see a clear 5-way move here. That's a clear 5 right there, look. A clear 5. 1, 2, 3, 4, 5. So if this is a 5, and then this is B, and then you got probably 1, 2, 3, 4, 5. But if this is a 3-way from the top, you gotta make the B way a flat. But this is a 3 here. Because I don't know if you guys, yeah, because you're counting the equal less here. 1233, 1234 is, yeah. I think it's a buy too. But that, I mean, the issue is this. This is a 5-way move from the lows. And this looks corrected from here. So needs to be continuation to the outside, in my opinion. I'm going to work in the inside of the count later on for the later day. Any other question, guys? Let's see if the other S&P, not the cash, the ES, it give you a better count. Yeah, that's more likely. Yeah, I know. I agree with you. Yeah, Isa was telling me this, that the euro, yeah, that should be the B weight top right there. Okay, guys, so let's leave it there. I put the recording later, and I get back to all you guys on the room. I'm going to work on the S&P count right there to see how it looks better. I mean, how it looks better. Okay? Let's leave it there, guys. Thanks.